Hello and welcome to Crypto Weeklies. Today in this video we are going to cover Arweave, conduct its machine learning based price analysis, regression based analysis and valuation, as well as accumulation strategies for AR, which is the token of Arweave. None of the content is financial advice. Let's get started. Today we are going to discuss Arweave because over the last 24 hours the Arweave has rallied by about 17%, one of the top rallying cryptos over the last 7 days by about 20%. And if you had noticed its coin market cap based ranking, it is at honing it at top 50 by market cap. Not too long ago Arweave was trying to get into top 100. Now it's uh, going to be soon to be in top 50 if the trend were to continue, or if we are looking at the circulating supply and the tokenomics of Arweave. About 99.5% of max supply is in circulation, fully diluted market cap at around 101.5 billion. Again, this particular analysis shares that if most of the coins are already in circulation, the impact of any token dilution or inflation on gains would be minimal going forward, which is always a good sign. In terms of analyzing the summary risk for the market, that is the overall crypto market, it's at currently at 0.2 risk. Again, the trend is clear. Whenever the risk is in this green zone, there are decent buy opportunities. When we move to this yellow zone, this is kind of neutral, and on the opposite side, if when we are in peak mania phase, the color code tends to be orange, which is high risk, and red, which is the highest risk. This is normalized risk between 0 and 1, 0 being the lowest risk, 1 being the highest risk. This is calculated by using top 100 cryptos and several risk based factors. You can read up on cryptoweeklies.com. All you have to do is go over here and check PeakValley Indicator. In terms of some of the wider narratives or the last 7 days, attention about the on social media platforms such as YouTube and X related to crypto is more towards the bullish sentiment, Bitcoin, Solana taking most of the attention. Also the FOMC and Fed rate cuts and BlackRock related narratives are gaining popularity. Also there are discussions about Cardano and Chainlink. We covered Chainlink yesterday on our channel. If you are interested in machine learning based forecast for Chainlink, you can check that video as well. And all of the content is available on Crypto Weeklies. And again, you don't have to pay or sign up for anything. We'll just focus on Arweave today, the machine learning based price forecast for Arweave. This is the weekly price action of Arweave averaged out, and the following are the three scenarios forecasted by our model. The first is the base case, which is the line in pink. For this case, the price action could be between $21 and about $31 between now and February 2025. If on the other hand, if the market witnesses a bull case, the price action could be between $24 and about $60 towards the end of the year, and again going forward till Feb 2025 between $60 and $80. The bear case between $11 and $18. The purpose of this forecast is not to tell what will happen tomorrow, as in if the market will go up or down. That is dependent on the market forces, but more the purpose is towards if the price were to go up, how high can it go at certain confidence level. These are the 68th percentile confidence forecast. If you believe that, and again, not just you, if the market is in the mania phase, this 68% forecast usually is invalidated. At that time, we look at more towards the 95 percentile, which is the 2 standard deviation ceiling forecasts. So we are also not quite there yet. In terms of the market behavior is still in 1 standard deviation moves. So as we move towards the mania phases, we do have those forecasts in line. Right now, the tabular valuation to pay more attention per my analysis is between the base case, which is the column in middle, and to its left is the 1 standard deviation bear case, to its right is the 1 standard deviation bull case. So those are the values week by week. If you're interested in those kind of values, all you have to do is go to Arweave over here on website cryptoweeklies.com and check the graph. In terms of the regression based analysis, and these analysis gets updated every single day as we get more and more data. The regression based valuation for Arweave is right now at 2 standard deviation bottom, currently at around $19. If there is a mean reversion related rally to one standard deviation bottom, that valuation could be at $36. So key level to see if Arweave holds this $21 price action at a weekly level, then if it were to rally, it's $36. If it were to crash, it's the $12.28. The fair value per this analysis is at around $63 for Arweave, which is close to what the machine learning model forecasted as a price towards the end of year in one standard deviation bull case over here at around $60. So in terms of now we're focusing the attention to the accumulation strategies, the SMA, which is small or short term accumulation, the DCA, which is a market cycle or moderate term, and the time weighted average price is the longest term. Starting with the SMA, which is 20-week moving average based mean reversion related risk based approach, wherever the risks are significantly low. For example, like it were in September 17th at 0.2 risk, when price was at around 18.5. The likelihood of mean reversion was at the second best time to DCA per this model. Right now the risk is slightly higher at 0.23, but again the mean reversion trade is not invalidated at this point. In terms of the DCA based model, which is again similar to the polynomial regression function based model that we just saw, in terms of accumulating, this is the best time per this model at around currently at 0 risk, between 0 and 0.1 risk band. That's usually the best time. You can see historically speaking, whenever the color is this purple or plum, that's the best time to get in for Arweave for this model. But the time weighted average price based model, which is this blue line, is the time weighted average price, and comparing the distance between the price and the average, the time weighted average price, this color codes and the risk scores are calculated per this model. Right now the risk is slightly elevated at around 0.15 risk, but again not too high risk. If you were to zoom it in, we were just close to 0 risk on September 17 when the price was $18.55. So all in all, if you were to average it out, the time weighted average price is 0.15 risk, DCA model says 0 risk, SMA model says 0.23 risk. So somewhere between the best time and the second best time to DCA Arweave for this model. If the regression based trend, if it were to go back to mean, reverting back to the mean, it could see some resistance at around this $36, and then again significant resistance around $60. So that's where we are with Arweave. Hope you like this content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.